US Federal Reserve Building, Wall Street, Jerome Powell at a press conference, headlines flash, rate cut coming, inflation slows, Fed eyes policy shift. A major shift may be on the way from the US Federal Reserve. Fed Chair Jerome Powell has signaled that a cut in interest rates could come as early as September, citing cooling inflation, steady job growth, and easing economic pressures. Powell speaking at a recent press conference. Powell said that we are seeing continued progress toward our inflation target. If this trend holds, adjusting rates could soon be appropriate. After nearly 2 years of aggressive rate hikes aimed at taming historic inflation, the Fed is now entering a new phase, a possible pivot toward stimulating the economy. In June 2025, inflation fell to 2.3%, the lowest it's been since early 2021, and near the Fed's long-term target of 2022%. CPI trends, unemployment rates, Fed funds rate timeline. At the same time, job growth remains solid, with unemployment hovering around 4% and wages growing at a moderate pace, a rare soft landing scenario the Fed has been aiming for all along. But the potential rare cut is not just about inflation. Markets have been tight, credit is less accessible as a housing affordability remains a crisis point in many US crises. A lower rate interest cut could ease the pressure on mortgage rates, small business lending, and consumer credit. Reactions from Wall Street, mortgage brokers, small businesses owners. Wall Street cheered the news with the S&P 500 jumping over 2% following Powell's remarks. Market analysts say that if the Fed cuts in September, it signals the belief the economy can grow without reigniting inflation. That's a huge confidence boost. However, not everyone is convinced. Some economists warn that cutting too soon could risk reigniting inflation, especially if energy prices rise or global supply chain get disrupted again. And others argue that the labor market is not as strong as it looks, with rising part-time employment and slowing productivity growth. Economists debating on financial news shows. Economists say that it is a delicate balance. The Fed does not want to repeat the mistakes of that 1970s easing too early, only to see inflation roar back. So what happens next? The Fed's next major meeting is in late September, and Powell has made it clear it's all data dependent. If inflation comes to cool, if job growth remains steady, and if consumer confidence holds, then the Fed's first rate cut since early 2020 may be just weeks away. Grocery stores, gas stations, construction sites, family budgeting at home. For everyday Americans, this could mean lower mortgage rates, easier borrowing, the relief for those juggling credit card debt and student loans. But make no mistakes, the Fed is walking a tightrope. September cut could be the start of a new era in economic policy or a risky global that could reshape the next year of American growth. The Fed's next move, coalition of confidence. Follow for economic updates and markets insight. Stay tuned because in this economy, every Fed decision stands ripples across the country. Like, comment, and subscribe for more economic updates.